What is basis in federal income tax?
Basis is a taxpayer's tax investment in property and is the starting point for computing depreciation, gain or loss, and many other tax consequences.
What is cost basis?
Cost basis is generally the amount paid in cash, debt, property, or services to acquire an asset, plus capitalizable acquisition costs.
What is adjusted basis?
Adjusted basis is original basis increased by capital additions and certain income items, and decreased by depreciation, amortization, casualty losses, and other reductions.
Why is adjusted basis important?
Adjusted basis is used to measure gain or loss on sale, determine depreciation recapture, and evaluate many non-recognition transactions.
What is amount realized on a disposition?
Amount realized generally equals cash received plus the fair market value of property, received plus liabilities assumed by the buyer minus selling expenses.
How is realized gain or loss computed?
Realized gain or loss equals amount realized minus adjusted basis.
What is the difference between realized and recognized gain?
Realized gain is the economic gain computed on the transaction, while recognized gain is the amount currently included in taxable income after applying any non-recognition rule.
What is a capital asset in broad terms?
A capital asset is generally property held by a taxpayer, except for specific exclusions such as inventory, receivables, and property used in a trade or business subject to special rules.
What is a Section 1231 asset?
A Section 1231 asset is generally depreciable business property or real property used in a trade or business and held for the required holding period.
Why are Section 1231 assets important?
Net Section 1231 gains can receive favorable capital gain treatment, while net losses may be treated as ordinary losses.
What is depreciation?
Depreciation is the systematic tax recovery of the cost of tangible property used in a business or income-producing activity over its recovery period.
What property is generally depreciable?
Property must generally be used in a trade or business or held for the production of income, have a determinable useful life, and be expected to last more than 1 year.
Is land depreciable?
No, land is generally not depreciable because it does not wear out or have a determinable useful life.
What is MACRS?
MACRS is the primary federal tax depreciation system that assigns recovery periods and methods to eligible property.
What is the half-year convention?
The half-year convention generally treats property as placed in service or disposed of at the midpoint of the year, unless another convention applies.
What is the mid-quarter convention?
The mid-quarter convention generally applies when too much personal property is placed in service in the last quarter of the year, causing assets to be treated as placed in service mid-quarter.
What is the mid-month convention?
The mid-month convention generally applies to real property and treats it as placed in service or disposed of in the middle of the month.
What is Section 179 expensing?
Section 179 allows taxpayers to elect immediate expensing of qualifying property, subject to taxable income and face-out limitations.
Why is Section 179 important for REG and TCP?
It is a popular tested election because it accelerates cost recovery and often appears in planning questions.
What is bonus depreciation in general terms?
Bonus depreciation allows immediate deduction of a specified percentage of qualifying property cost, subject to the law in effect for the year tested.
What is listed property in a tax context?
Listed property refers to assets with significant potential personal use, requiring careful substantiation and potentially limited depreciation treatment.
What happens if business use of certain property drops significantly?
Prior accelerated depreciation or expensing may need to be recaptured or adjusted when business use requirements are no longer met.
What is amortization?
Amortization is the tax recovery of certain intangible costs over a statutory or useful life period.
What is basis of property received by purchase?
Purchased property generally takes a cost basis equal to what the buyer paid plus capitalizable acquisition costs.
What is basis of property received by gift?
Gifted property generally takes a carryover basis from the donor, subject to special dual basis rules when fair market value is less than donor basis.
What is the dual basis rule for gift property?
If the property's fair market value at the gift date is below the donor's basis, one basis may apply for gain and another for loss.
What is basis of inherited property?
Inherited property generally takes a basis equal to fair market value at the decedent's date of death or the applicable alternate valuation amount.
Why is inherited property basis favorable?
It usually produces a step-up or step-down to fair market value, potentially eliminating per-death gain or loss.
What is holding period for inherited property?
Inherited property generally receives long-term holding period treatment regardless of how long the heir actually holds it.
What is substituted basis?
Substituted basis is basis determined by reference to another property's basis, such as carryover basis in gifts or exchanges.
What is transferred basis?
Transferred basis is another term for basis carried over from the prior owner or prior property in a non-recognition transaction.
What is the basis of property converted from personal to business use?
The basis for depreciation is generally the lower of adjusted basis or fair market value at the time of conversion.
Are personal losses on sale of personal use property deductible?
No, losses on the sale of personal use property are generally not deductible.
Are gains on sale of personal use property taxable?
Yes, gains on the sale of personal use property are generally taxable unless a specific exclusion applies.
What is the character of gain from sale of investment stock?
Gain or loss from sale of investment stock is generally capital unless a special rule changes the result.
What is a wash sale?
A wash sale occurs when stock or securities are sold at a loss, and substantially identical stock or securities are acquired within the specified window, disallowing the loss.
What happens to a disallowed wash sale loss?
The disallowed loss is generally added to the basis of the replacement securities.
What is a like-kind exchange?
A like-kind exchange is a qualifying exchange of eligible business or investment real property in which gain is deferred, except to the extent of boot.
What property qualifies for like-kind exchange treatment under current general rules?
Generally, only real property held for productive use in a trade or business or for investment qualifies.
What does like-kind mean for real property?
Real property is broadly like-kind to other U.S. real property held for business or investment, even if the properties differ in grade or use.
What is boot in a like-kind exchange?
Boot is non-like-kind property or cash received in the exchange and can trigger current gain recognition.
How much gain is recognized when boot is received in a like-kind exchange?
Recognized gain is generally the lesser of realized gain or the boot received.
Can a loss be recognized in a like-kind exchange?
No, realized losses are generally not recognized in a like-kind exchange.
What is the basis of replacement property in a like-kind exchange?
Replacement property basis is generally the old basis, adjusted for boot paid, boot received, gain recognized, and loss recognized if any rule applies.
What is a deferred exchange?
A deferred exchange is a like-kind exchange completed through replacement property identification and acquisition within statutory deadlines rather than simultaneous swap.
Why are identification and exchange deadlines important in deferred exchanges?
Missing the statutory deadlines causes the exchange to fail and the transaction to become taxable.
What is an involuntary conversion?
An involuntary conversion occurs when property is destroyed, stolen, condemned, or disposed of under threat of condemnation, and the taxpayer receives insurance or other proceeds.
When can gain from an involuntary conversion be deferred?
Gain can often be deferred if the taxpayer timely purchases qualifying replacement property within the statutory replacement period.
How does basis of replacement property work in an involuntary conversion?
The basis is generally the cost of replacement property reduced by the gain deferred.
What is recapture?
Recapture converts some or all gain from the sale of depreciated property into ordinary income to reverse prior depreciation benefits.
What is Section 1245 recapture?
Section 1245 generally recaptures prior depreciation on depreciable personal property and certain real property components as ordinary income up to the gain realized.
What is Section 1250 recapture in broad exam terms?
Section 1250 relates to depreciable real property. For individuals, straight-line depreciation generally avoids classic recapture, but may produce unrecaptured Section 1250 gain taxed at a special rate.
Why are Sections 1245 and 1250 heavily tested?
Because they determine whether gain is ordinary or capital-like, and often appear in property disposition calculations.
What is Section 1231, look-back recapture conceptually?
Prior net section 1231 losses can cause current net section 1231 gain to be recharacterized as ordinary income to the extent of those non-recaptured losses.
What is an installment sale?
An installment sale is a disposition in which at least one payment is received after the tax year of sale, allowing eligible gain to be recognized over time.
What is gross profit percentage in an installment sale?
Gross profit percentage equals gross profit divided by contract price and determines the portion of each principal payment treated as gain.
Can all property dispositions use installment reporting?
No, some transactions, such as dealer dispositions and certain inventory sales, generally do not qualify.
Is depreciation recapture deferred under the installment method?
No, depreciation recapture is generally recognized in the year of sale before installment. Gain deferral applies to the remaining gain.
What is a casualty loss?
A casualty loss is a loss from sudden, unexpected, or unusual events such as storms, fires, or theft, subject to differing rules for business and personal property.
How is gain or loss measured on sale of business property?
Gain or loss is generally amount realized minus adjusted basis. Then the character rules such as sections 1231, 1245, or 1250 are applied.
What are capital losses generally limited by?
Capital losses first offset capital gains, and any remaining net capital loss for individuals is subject to an annual deduction limit with carry-forward rules.
What is a related party transaction?
It is a transaction between parties with a specified relationship under the code, such as family members or certain commonly controlled entities.
Are losses on sales to related parties generally deductible?
No, losses on many sales or exchanges between related parties are disallowed.
Why are related party loss rules important?
They prevent taxpayers from creating artificial losses while effectively keeping property within the same economic group.
Can a later sale by the related buyer restore a previously disallowed loss?
The disallowed loss may offset future gain on a later sale by the related buyer, but not create or increase a loss.
What is ordinary income property for charitable contribution purposes?
It is property that would produce ordinary income or short-term capital gain if sold, limiting the contribution deduction to basis in many cases.
What is capital gain property for charitable contribution purposes?
It is generally long-term appreciated capital asset property, often allowing a deduction measured by fair market value if all requirements are met.
What is basis allocation when multiple assets are purchased in one transaction?
The total purchase price is allocated among the assets based on relative fair market values or specific statutory allocation rules.
What is bargain purchase treatment in general asset acquisitions?
If assets are acquired in a taxable purchase for less than aggregate fair market value, cost is still allocated among the assets using the applicable allocation rules rather than simply carrying over old basis.
What is assumption of liabilities effect on amount realized?
Liabilities from which the seller is relieved generally increase the seller's amount realized.
What is assumption of liabilities effect on basis to the buyer?
Liabilities assumed by the buyer are generally part of the buyer's cost basis in acquired property.
What is holding period important for?
Holding period helps determine whether gain or loss is short-term or long-term and affects the character of many dispositions.
When does holding period generally begin for purchased property?
It generally begins on the day after the property is acquired.
When can holding period tack onto replacement property?
In many substituted basis transactions, such as like-kind exchanges or gifts for gain property, the old holding period can carry over.
What is a capital improvement?
A capital improvement is an expenditure that adds value, prolongs useful life, or adapts property to a new use, and is added to basis rather than deducted currently.
What is a repair for tax purposes?
A repair generally keeps property in ordinary operating condition and is usually currently deductible if it does not materially better, restore, or adapt the property.
Why do capitalization versus repair questions matter?
They affect timing of deductions, adjusted basis, and future gain or recapture on disposition.
What is depletion?
Depletion is the cost recovery method for natural resources such as minerals, oil, gas, and timber.
What is cost depletion?
Cost depletion allocates the basis of a natural resource over the estimated units to be extracted and deducts basis based on units sold.
What is percentage depletion?
Percentage depletion allows a statutory percentage of gross income from a mineral property as a deduction, subject to limitations and eligibility rules.
What is abandonment loss?
An abandonment loss may be recognized when business or investment property is permanently discarded without compensation and intent to abandon is shown.
What is worthlessness loss for securities?
If a security becomes wholly worthless, it is generally treated as sold on the last day of the tax year, producing capital loss treatment.
What is the character of gain on sale of inventory?
Gain or loss on sale of inventory is generally ordinary because inventory is not a capital asset.
What is the character of gain on sale of accounts receivable?
Gain is generally ordinary because receivables are excluded from capital asset treatment.
What is a non-taxable stock split's effect on basis?
The shareholder generally allocates the existing basis over the total shares owned after the split.
What is a non-taxable stock dividend's effect on basis?
The shareholder generally reallocates total basis among old and new shares received in the non-taxable distribution.
What happens to basis when return of capital is received?
A non-dividend return of capital generally reduces basis, and any excess over basis is treated as gain.
What is the basis effect of depreciation deductions?
Allowed or allowable depreciation reduces basis even if the taxpayer failed to claim the deduction.
What does allowed or allowable mean?
It means basis is reduced by the depreciation deduction the taxpayer actually took or should have taken, whichever is greater under the rule.
What is the tax result when property subject to recourse debt is sold?
The debt relief is generally included in amount realized, and any cancellation of debt issues are analyzed separately if applicable.
What is the tax result when property subject to non-recourse debt is sold?
The outstanding non-recourse debt is generally included in amount realized, which can produce gain even if the property's fair market value is lower.
What is a bargain sale to charity?
It is a part sale, part charitable contribution transaction, in which basis must be allocated between the sold portion and the contributed portion.
Why are basis allocation questions common on the CPI exam?
Because many tax consequences turn on correct basis assignment, and the exam often hides the issue inside contributions, exchanges, gifts, or mixed-use property.
What is the best exam approach to property transaction problems?
Compute basis first, compute amount realized second, determine realized gain or loss third, and only then apply non-recognition, recapture, and character rules.